Good morning. Welcome to ATI Pro Media. We're powered by Advanced Trading. We have a lot of things to go over. A lot of moving parts here. Yesterday really rocked farmers' worlds. Our friend Scott Irwin, if you haven't read his book, you should. I think it's called Back to the Futures. Scott Irwin put out a post on the internet, 150,000 impressions. Those are all farmers creeping, looking at his little free spreadsheet, wondering why didn't the spreadsheet save me? Little Freudian slip there. But hey, spreadsheets aren't going to save you, nor am I. This is a sinking ship, and I'm not sure they put enough lifeboats on this one. We're starting to see a little panic. That's usually a buying opportunity for the speculator. I became a farmer yesterday, as I had said on the show, and I'm still a farmer today. Markets go up. If corn goes up 5-7 cents, I might not be a farmer at the end of the day. Is the bull market over? Connor Bridgman's going to bring that up, and he's going to go over a couple scenarios. But before we get into today's notes and everything else, thank you for watching. Don't forget to like and subscribe to the Advanced Trading YouTube channel. That really helps. Drop a comment. We'll always get back to you. With that, let's take the LaSalle Street and see if these markets are still up as much as they were on the open. These corn up 2.5. Beans still struggling. Soybeans down 5. No soybeans down 6. Meal up a little bit. Oil coming back down 130 ticks. Wheat doing better. Wheat has some say wheat has a great story. Brady has done some specials about that. Border Trade wheat up 7, KC wheat up 7, hard red spring wheat up 5. Moving over the cattle, seeing some strength in the cattle after yesterday's bad day. Cattle up 100, feeders up 60. Moving over to Wall Street, that's where Brother Joe was trying to go. Gold up 10, silver up 40. 10-year, 5-year, 2-year, 30-year, the whole deal. Bonds down, interest rates creeping up, crude oil down 55, natural gas 28. Natural gas trading 23.94. Looks like that hot weather moved out. Volatility in the stock market, Dow Jones down 130, NASDAQ up 100, continually seeing that divergence and spread between the two. Bitcoin up close to 1,000, copper about unchanged. All right, let's bring him in, Connor B. We have a lot of things to talk about here, all types of goodies. You pulled up some charts. The internet was full of free information. I understand you were snipping and clipping yesterday, and God bless the people who like to work for free. What do you got, my friend?
A ton of stuff. We had commitment of traders. We had crop conditions. But here's the question. You prefaced it a little bit, Tommy, but is the bull market over? And I would say if you're looking at a chart, all right, let's pull this in here. We're back to 2020, right? If the bull market for you started in 2020, we're back to those levels that we saw. So looking at that, I'm going to go ahead and say yes, right? Tomorrow's not guaranteed. Hopefully we can get some bullish news, right? I'm not sure what it is, but hopefully we get something. But back to 2020 levels looking at the SEP contract, Tommy.
Yeah, some people say this is Nixon's fault, but you got to deep in the history to understand that one. Yes, for some, this is over. For me, I could see where I could buy dips and do well on this because you look at something like a $5 call trading. This is going to blow your mind. But we have still quite a bit of time left. These expire during Thanksgiving. Like a $5 call is trading 3 cents. Do I think corn's going back to 5? No, but if it did, you'd sure have a heck of a story, right? So 3 1/8, 3 1/4 bid ask on that D's $5 call. Real quick, looking at the D's 450 call, 8.5 cents, traded as low as 7 7/8 last night, as high as 9. For 8.5 cents, you own from 450 to Infinite. And you know what? Infinite's pretty far. I know you have little kids and you probably watch a little Buzz Lightyear there once in a while. So to infinity and beyond for 8.5 cents. Do I think we're going there? I don't know. I've seen a lot of smart people go broke over the years for what they think. So let's not try to outsmart this. But from a risk management standpoint, it's become very clear what our choices are as we bleed into crop insurance, everything else. And that's what's so fascinating. Talk about what Scott Irwin popped up. I don't know if you have it as a pop-up, but we did see
No, I
the
don't.
effect in the impressions of it. And maybe I think Brady's out there. He might be able to pop it up, snip it and clip it if you want. It was just, I did see it. And it was it was actually Grain Stats who said, look at this. Look how bad the situation is, that this impression from Scott Irwin
And
at
you said
100.
it. Yeah, 150,000 people. It was kind of like, when a lot of people drive down a country road when there's been a car wreck. It was kind of like that because what he popped up was Farm Doc U of I's balance sheet and projected income for the Central Illinois farmer, right? And here's a spoiler, Tommy, because I didn't have it up. Brady, if you can pop it up quickly, let's pull it in there. But we're looking at significant negative returns. And, it wasn't like they were using a 180, 200 yield and 55 bushel soybeans. They were using 220s, 230, a fair APH for Central Illinois. And we're not looking at good returns. So it was just kind of saying what we all know is that we are looking at negative returns for the U.S. farmer this year with these prices.
Yeah, there it is right
Look
there.
at that. My gosh.
Yeah.
So a 227 and 72. And so go down to farmer return. If you're looking at that 110 negative 110.
Ticker. Hold on 1 second.
Yep.
Jojo, get rid of the ticker. That'll help. Thank you. Thank you, sir.
Yeah. Okay, 110 and then negative 57 on soybeans. So, right. Break even. If you throw a cash rent or land costs on there, we're $5.12. And as we sit today, gosh, that feels like a long way away, Tommy.
Yeah. What do you think cash corn for fall delivery for your father or someone is? Are we in that 375 level?
Right at 375. 30 to 35 under right now is basis on corn.
Mm-hmm. We can get rid of that chart. I miss your pretty face. Thank you, whoever popped that up. Big round of applause. I looked at cash corn in North Dakota for fall delivery, 350 everywhere. If you're a hero, 360. Congratulations. But the amount of damage out there. Now, I talked to some very smart clients yesterday in North Dakota, and they said, "You want to know a secret?" I said, "Sure." They said, "There's a ton of grain up here. There's a ton of grain up here." And they're calling the people who bundle grain saying, "Hey, help me." So even if you work with a bundler, they're getting you 10 cents better, but it's costing you about 8 cents to use the bundler. The truth is there's too much grain in certain parts of the country. Now, how do you diffuse the Iowa client who insist we're running out of grain because as corn went down 18 yesterday, the basis went 10 cents better, which still means there was a minus 7 or 8 cents in the price of cash corn. They're like, "Oh, in Northeast Iowa, the basis improved 10 cents. That's proof we're running out." Can you help me with that? You're a smart guy.
To me,
full screen. Smart guy, full screen.
All right. I love when Tommy just throws questions at me. Just so we know we're not prepping at all. So when I hear that, right, the old crop basis, right? So we're talking a July, August delivered corn. That basis is rallying. We're seeing it in Central Illinois too, right? I think local corn plants of 15 over, and I can't remember soybean base off the top of my head, but we're seeing good basis levels. What that tells me is that whatever's left in the country in the elevator, they're having to pay to get it out of the farmer's hands to get it moved, because guess what? If you've held it this long, you're not getting real excited to move it. So if we're looking at an old crop basis and saying the crop's not out there when we haven't even harvested the new crop, right? And we're talking about that supply, it's apples to oranges, Tommy, how I look at that, right? The old crop basis rallying significantly does not equal a supply issue on the new crop. It's as simple as that for me.
I liked it. I had a client say yesterday that he called, he said the market's got it wrong going down, and he gave all the reasons on why, because he's part of these different groups and stuff. And he said, this group, that group, this group, that group. And a lot of these people in this group have a problem. They're North Dakota, Minnesota. There are problems out there, no doubt. Hail damage, lot of coverage on that. And with that, I said, did you ever think that yesterday's move had nothing to do with what those problems are? It had everything to do with old crop quietly flooding the market. The panic on old crop and basis contracts continues as farmers realize they're 60 to 90 days away from having to make room for new crop. So I did sense a little bit of panic today, and with corn only up 2 now, I'd feel a little better if it was up 5 or 7 or 10 and bouncing real good, but we may close lower today with price action like this. So I truly felt a sense of panic. And when you search the word corn on Twitter X and you find different spreadsheets and stuff, it's interesting to see how. I talked to another client. I asked him how he's doing with forward sells. He said, "I'm not selling a bushel because it's below my cost production." And my only response was, "I'm interested to see how that works out for you." So I don't know what his situation is in particular. I would imagine there's a lot of family money and he's going to show them, right? So the analogy I wanted to tell people today, I was thinking before we started the show, was many young farmers think they're at the health club. They're going to go on this long walk called 2024 marketing, and they're walking 5 miles on a treadmill at 2% incline. It's not true. The incline's at 6, and you've never walked at a slope this steep when it comes to interest rates and what you're going against. So do I believe corn could rally and basis can improve? Absolutely, usually does. But with operating notes at 9%, you are still with 20, 30-cent rallies losing money every quarter if you continue to carry that grain. And I think you understand the math of that pretty correct. So again, for those of you in the back of the room, you young guys, you're quietly getting destroyed, but you don't realize it because you're not writing a check for it. Just the check that comes into your account when you sell grain is going to be so much slower. And then when you go to do your rear view mirror accounting, when you go like this and see how you did last year, you're going to have a disaster. And I know this because I visit with my banker friends all over the country, and several of them are subscribers to ATI Pro Media. And congrats to the bankers. In 2025, you're going to have a job again. I know you've had it easy the last few years. It's been really nice being at the lake, but in 2025, you are going to have to be a banker. You're going to have to go over balance sheets. You're going to have to check credit, and you are going to have to depreciate things you haven't depreciated in years. Because if commodity prices continue to go down like this, the next thing to slide will be land. So I believe there's a huge burn rate right now in operating cash. And I know this because some of my clients are presidents of really large ag lenders, and they are quietly telling me there is a burn out there like they've never seen. And the accidents happen. Back to you, sir.
Yeah, well said. You're talking about looking in the rear view, talking about operating notes, interest rates. We've got to know those. Along those same lines, make sure if we're putting grain in the bin, we are now in a carry market potential for the carries to get wider, right? We need to be cognizant of that and be ready to make sure our bin bushels are working for us, right? Past couple years, merchandising in the farm gate, we could sell it across the scale and be just fine. Right now, we got to be a little bit better merchandisers and do a quick review of that. That'd be a great premium, Tommy. So other thing that I've been preaching. So
yeah,
let's go ahead.
Go ahead. Did we even go through the headlines, or did I just start preaching on my soapbox?
You just started going, and we'll get to the headlines later. So I always love when Tommy gets to preaching. Here's the only headline I had, and one that we're not necessarily talking about a lot, but Dr. Cesar Cruz gives a great job of keeping us in the loop. Conab just released how far their harvest progress is. Tommy, the Safrinha corn crop is 61% harvested. Last year, they were 29% harvested, right? If we're going to be a bowl where you're looking at exports ticking up, that's what we hope for. But at this Brazil corn crop, I think it's safe to say it's not a disaster. We're going to know, I believe it's Thursday, we're going to get some more production estimates. So we'll see if they increased it last time. They're still lagging behind what the USDA says Brazil has for a crop, but we'll see where it is. And so if they have a crop that's harvested a little bit earlier, where's our window of opportunity for U.S. exports? That's the question I've been asking myself.
Very good stuff. Very good stuff. Real quick, switching subjects. I pulled up the Illinois Farm Doc. And it just, look who's on this. If you pull up the front page, they have a Center for Farmland Research, CoBank, a bank, Compeer Finance, Corteva, Farm Credit Illinois, Growmark, Illinois Soybean Association, Illinois Corn. There's so many smart groups out there and banks and companies, and everyone's selling you something. One other thing Grain Stats put out there, and I know you noticed it, is that the whole industry is based on, I don't know how he worded it. We should get the exact quote. If you can copy and paste, it'd be great. But he said the whole grain industry / newsletter industry is based on bullish stuff. Now, I have several clients who subscribe to a lot of stuff. They subscribe to us, other shows like this, other text audio services, and they just like research. And they said there is a firm out there who was on fire in the 21-22 bull market. They look so smart for being bullish. They said the amount of destruction and the amount of lack of sales they've made and the amount of excuses they've made in the last 3-4 months are crazy. And so it's auto renewing subscription time, and they're calling, and I've had 3 clients call last few days say they dropped that service. Now, I understand this because as we do ATI Pro Media Premium Edition, I had a client who said, I don't know if I like your service. You're kind of bearish. Well, looking back, I'm sure he's watching, we're right. And you almost canceled me. I mean, that's part of the cancel culture is I don't care what you're saying. I just don't like how it makes me feel. You're canceled. And so what's happening is some of the people I think what happened to farmers, if you ask me, Tommy, how did the farmer get so long? I think a farmer was holding grain. They called a few well-respected friends, clients, and everything and said, "What do you think? What do you think?" And they said, "I subscribe to this, they're bullish. I subscribe to that, they're bullish. This one has a 10% sale recommendation." But in the end, they got 5 or 6 people to all agree with their bias. And I think that word, it's a big one, is cognitive dissonance. And we could do a whole speech about that. I talked about it at Commodity Classic once. What do you think of that statement, Connor?
It's good advice. The farmer has a natural long from the day they started farming until the day they retire. And so it is human emotion, it's psychology, right? We benefit from higher prices. That's the news we want to hear, right? And so I guess my advice would be, if we've learned anything, you need to be listening to things that make you uncomfortable, right? Things that maybe you don't want to hear, right? That we started the year at close to $5 and right now we're close to 4. And to act accordingly, right? It's not just being the forever bull in a newsletter that says, yeah, the markets could go up, don't sell anything. Is that good advice, Tommy? If you're sitting on a natural long position every time that, oh yeah, do nothing. I don't think so.
Yeah, I understand. Here's Grain Stance, whoever did that. Hey, Brady, if you're here, can you pop in? We have a couple rental dogs upstairs, and I have to shut those dogs up. I can't live stream with dogs barking, and actually they stop, but you can pop in anyway because I just love you. So here comes B Huck, Hat
They
Backwards.
must be bullish, Tommy. They don't like what you're saying. So
The dogs. I got little Tommy Jr. down here. For those of you out there who wonder how our dog got named Tommy, he was adopted and he came with that name. I did not name my dog Tommy. That would be like, who was the fighter who had 4 sons all with his
George
name?
Foreman.
Yeah, this is George Jr. This is T-Bone. We call him T-Bone. He's pretty cool. He's 16 pounds. He stopped us from a lot of FedEx trucks and mail people. We could have really got hurt. So, but he's sitting right here. He's so good right now. All right. With that, B Huck, what do you think of that statement? Pop that back up.
Yeah, I'm gonna throw that back up there. I didn't see this yesterday. It's good stuff though, but it's gosh, just social media, just in a nutshell with Twitter and Facebook, grain market stuff. We all gravitate towards those bullish posts and those bullish viewpoints, and it just feeds our bias, and we get directional bias and all those things that just lead into I don't have to sell or the market's going up. And now, recently it's the market's going down, and we just paint ourselves into a corner of the market can't go up anymore. But things are going to change going forward, and whatever it takes to sell a newsletter, I guess, and get told what you want to hear, pat ourselves on the back, I guess. I don't know. It's interesting industry. In times these markets moves, they get dynamic, they're emotional. At the end of the day, you know what I'm focused on doing right now, guys? It's helping manage existing positions we got on. It's help button up wheat harvest bushels and what our plan is going forward. And then it's, adjusting targets. If you're undercovered, just adjust your target. Let's adjust our targets. Let's adjust our perspective. If you got a 520 order to sell Dees corn at 520 out there, the market's got a lot of work to do out there. You might sprinkle a few more sales in between here and there. But that's what I focus on going forward. Rather, complaining doesn't get me anywhere, guys. It doesn't get me anywhere.
But you do have something really cool happening for you right now as you work with a ton of cattle people, and they're in an incredible, one of the biggest bull markets in history. And you just can't, one hurricane rain can't make more cattle. Is that true? If I'm wrong, you tell me.
Right. It's going to take, time for the herd to rebuild itself from the beef cow herd. But you're at a price point, you go to the grocery store and look at what a ribeye is, and you talked about it, how many ribeyes have I ate over the last month? I haven't ate a whole lot of ribeyes over the last month. They're pretty darn expensive. And are you at a price point where the consumer starts to push back a little bit? You talk about that equity burn, and the cost of money, that cost of beef at the grocery store. We might sell a lot of hamburger, but the steaks and the tenderloins, prices have a way of curing themselves.
Yeah, absolutely. Good stuff. Let's talk about premium yesterday. First thing, batting off in the morning, we had Mick Care talked about weather, did a real good job of describing what could happen there. Second of all, I talked after work about commitment traders report crop conditions. Obviously, there was some just loaded with information, broke each and every one of those down. Y'all know the price action from yesterday. Really didn't have to talk about it because I think y'all lived it. Questions, comments? That was ATI Pro Media Premium. I sleep like a baby at night knowing what we talk about and what we give. And I don't feel bad that I'm not wildly bullish in a bear market. Go ahead. Are Are there crop farmers could switch to that won't blindly follow corn or beans? Are there crops that farmers could switch to?
Yeah, he wants to
Yeah, I know
plant.
what you're saying,
He's
yeah.
tired of these prices. He wants to plant
Well,
something else.
he's in North
Rob,
Dakota, South Dakota area, North Dakota, South Dakota area. If you
so
grow
then-
barley, it's following corn. If you grow, you just grow anything, it's kind of following corn. Tell me what's
Yeah.
not.
my
linked
head went to
corn.
like the edible bean, like the navy bean, you know.
Mhm.
But talk about a crop I'm not familiar with either. But
I'm familiar with them, but they only let you get forward sold on a third, and then the market gets flooded with them, and it's a very wonderful market. I know a lot of farmers who've made a fortune growing edibles, not the type you can buy in Michigan and Illinois, but the type you grow all your type of beans you put in soup and stuff. But the that market gets saturated quick. And then also edibles don't like wet feet, so the type of conditions we have in North Dakota this year with the excess rain is really probably going to give you a bad crop there. Also, people get caught really messed up playing with the basis on edibles. So people grow edibles for sell edibles, and then they don't grow them, and you have to deliver on them. There's some crazy stories that happen in edibles. But I'll tell you the one thing that farmers absolutely love growing in North Dakota, and that's sugar beets, 500,000 acres of sugar beets. And the reason they like it is Crystal and the other company market the sugar for them. And that's the number one compliment. They say, we just grow the beets, get the tons, the sugar, Crystal will market it for us. And they love that partnership. So obviously you need great dirt, and it helps to have that tiled in that Red River Valley. So,
right. You know, not in North Dakota, but thinking of other crops, go back to the March intentions when we were thinking if we saw a reduced corn soy acreage number, were we going to see an increase in cotton acres, right? Brady, this is kind of your area, right? And February, March, right, we saw cotton prices. They were right. You know, we kind of saw it do a negative correlation to corn, soybeans. So, you know, right now I haven't followed the cotton price at all. If you've got it in front of you.
It has sold off significantly since March. You know, we're looking at 85-cent cotton on the Dees contract, selling off to 70-cent cotton. Big move on cotton.
So here's a tough question. If we go 6-7 months down the road, let's go to the next March intention. Can we see, right? I go back to 16-17 where we really saw cotton acres kind of infringe on corn acres, right? Because corn price was 340. Do we see that same setup, Brady? Do we see more cotton acres going into 2025?
So yeah, to Robert's point, I think, you know, when corn and bean prices aren't attractive, you go to something that maybe is a little more attractive, and cotton might buy some acres. But the scary thing with cotton to me is how dependent we are on export demand with, you know, going to China. And you think with the COVID years, cotton prices took a huge hit during that time frame, more so than the regular grains. So I think there's, you know, definitely some concerns there on those crops. You know, you think about the hemp and some of those other deals as well.
Oh God, I forgot about that one.
You know, you do something, a niche market, and you paint yourself into a corner. Oftentimes, you know, we also think about, you know, the price when we make a planting decision, the price that is there, it's not always there at harvest. You know, the price changes between planting and harvest, and we got to, if we're making a decision on what we plant based on the pre-plant price, we got to do something between then and harvest to protect that price.
We got to defend that price. Well said.
Yeah.
Well said.
I like this comment from Adam here.
Yeah.
You know, going back to my agronomy days, you know, we're all, and Tommy says this all the time, you're in the bushel business and you get paid to grow bushels. And if the fungicide makes sense agronomically to protect bushels or to help you produce more bushels, it just makes a lot of sense to me on fungicide and taking care of that crop. But you're going to do it. Your neighbor's going to do it. Everybody's going to do it. You're all in the bushel business, and we all want to raise as many as we can.
But it's good thinking, Adam, and I think it speaks more to the sentiment of where we are right now when we're bumping up to that. We talked before the show, where is that crop insurance level if you took the 85% and you're right at APH? What was the number? Was it 396, I think, is where, you know, we dip below that on 85% and you grow your APH, we're going to get a payment. So we'll see, right? The one thing I always say about crop insurance is it's a moving target. Even if we don't spray fungicide and we get 5-10% above our APH, right? Central Illinois is set to get anywhere from 2 to 8. I heard as much as 8 inches of rain coming in the next about 8 hours. And so, what are we looking for yield potential? So,
yeah.
Did you guys see the pictures of that storm down in Texas? I mean, Mother Nature's just incredible. what
It
can
really
happen.
is, yeah. And no matter, there's always you think about areas that have it better or worse than you, and every year's different, and everybody deals with their own challenges. And man, Mother Nature, yeah, comes in and creates a lot of hurdles for us. Makes
Real
farming.
quick, guys, before we check out here, I want to pop up the weather map just because this thing's a water dropper.
Oh wow.
Yeah, and it's going up to Canada. Our friends in Ontario. I know Andy Clean up there in Ontario. He's always they can get dry right up there. We grow grain in a lot of places. Nice to see our folks in North Dakota, Minnesota, and
Mhm.
South Dakota not getting hit with the storm. But the amount of purple is I'm not
That
sure.
eastern belt needs a drink too, doesn't it? That's gonna help a lot
Yeah,
of acres over there.
yeah.
Mhm.
There's a lot of stuff. We have clients in New York and all over. Advanced Training is it's interesting to see the heat map where our clients are. Okay, folks, it's always fun doing this. Do you guys have anything else you want to talk about?
No, good
Save
show.
for
We went a little long, but good topics.
Yeah, I'm bummed out. I'm a farmer and corn was up 4 when we started this. Now it's only up 1. So yeah, tough sledding. But you know what's wild? I can click a mouse and not be a farmer in a second. That's the emotional difference between what traders do and what farmers do and what hedgers do. And yeah, there's some wild stuff. These storms could keep playing havoc. Could you guys see a scenario down the road where we get bullish because too much water? Anyone old enough to remember a situation like that?
So let's go through that scenario if you want. So if we're getting real bullish, right, we're going to talk flooding, significant rains. It's July 9th, right? I'm in Central Illinois, so I'm a little bit biased. But what does too much rain look like? We're going to need in my area, right? You guys speak to your areas if we're talking flooding post July 9th, right? Flooding earlier, different story, but we're going to need a derecho and significant storms to come with that precipitation to see a supply issue, in my opinion. What do you guys think?
I'm the same boat. I think, to me, the supply issue in the U.S. is going to be minimal going forward, and you need a demand story, or you need a supply problem somewhere else. That's South America, Ukraine, somewhere over there. That's what helps the U.S. farmer, in my opinion, and a demand story, big demand story.
And you know what's amazing? We're talking about flooding. You guys remember when we started ATI Pro Media? We were talking about the dryness of the Mississippi River. We weren't going to be able to get any barges out. And my gosh, how much that story's flipped, huh?
Yeah, tremendously, tremendously. All right, guys. Good stuff as always. Always enjoy doing this. If anyone needs help, give us a call, 1-855-737-FARM. We can pump out the prior day's videos on premium. The phones are blowing up, and I'm interested to see where corn closes. I don't think it's funny, the excuses farmers come up with, but I do find it interesting from like a interesting standpoint that they think they're telling us something new, and I've heard that 10 times this day. That's all I want to say. No, 93, 203, 214, all heavy rain years, slight rally, rain makes green somewhere.
Yep.
That young lady is right. Now, I started my first day in the corn pit on June 24th, 1993. And the rally, that was a huge flood of floods. And it took a while to get it going. I mean, we rallied a little bit and broke, and then we rallied all fall and a little bit of winter. So if you have a long-term bias, you're going to have to play this from a different, it's probably not going to be the August call, right? It's got to be a March, a May, a July, some combination of something out there. And with that, yeah, we'll keep doing this. What do you think today's show will be titled, guys? What did we talk about? Let's show everyone how we discussed the title of today's show.
My first thought is Joe's going to be mad we went long, but we can't put that as a title.
Joe's waiting.
Look at him laughing.
Right.
He's going.
So in my head, I would say something about like how we went back to 2020 levels. Is the bull run over? Where do we go from here? That's where my head goes.
Sounds good, Brady. Great suggestions there, Brady. We'll see you guys tomorrow.
Thanks for joining us. We're here every day, 9 a.m. Central. Don't forget to like and subscribe. We'll see you next time.